Ladies and gentlemen, welcome back to another episode. Today is October 20th. The stock market effectively broke today. With the AWS outage, most people are unable to do anything in their portfolios. This is actually going to have a pretty big impact on markets. And I suspect, hopefully, this situation is done by tomorrow, it could create a pretty interesting situation. And I will talk about that in today's episode. Now, we have a lot of headlines from Trump on China, on the government shutdown, on new, bank notes on this market that we're going to get into. We're also going to look at earnings for this week and talk about that. My thoughts around earnings, if it's going to be positive or negative for markets. And we do have some economic data coming out this week as well. I'll give you a quick little refresher. Now, before we get into all of this information, hit the like button as well as subscribe to the channel. Check that link out down below in the description of today's episode if you want to come invest and trade with us. Now, I'm not a financial advisor. I am not a financial planner. We are outperforming all hedge funds and institutions this year. I think this is a market in which there's a lot of opportunities in smaller companies that Wall Street does not pay much attention to, specifically in AI software, energy, robotics, biopharmas, quantum. Okay, these are bull markets for the next 10 years, in my opinion, with the AI arms race with China. From a macro perspective, from a micro perspective, there is intense AI competition between Google and ChatGPT, between Microsoft and Google, between NVIDIA, AMD. Internal competition in this country, and then external competition with China. The CapEx will flow. That's not going to stop. We are early innings in AI. And as some people have talked about, I do not think we're even close to an AI bubble. So you want to be taking decisive investments in the underlooked and underappreciated stocks that are of high quality that just Wall Street is ignoring. Okay? We talk about those stocks on this channel. But if you guys want to come get involved with us, check that link out down below in the description of today's episode. With that said, let's get started. And honestly, I don't even know where to get started. So let's talk about this whole AWS situation. Now, let's talk about this whole AWS situation. Snapchat was dead. Roblox won't load. Canva's crying. Even Alexa's pretending she didn't hear you. It's not you. It's AWS, the invisible backbone of half the web, choking in its own cables. Amazon Web Services says its core US East servers are seeing increased error rates. In other words, the world's most critical data center just tripped over itself. The outage hit around midnight Pacific. By sunrise in London, social feeds were ghost towns and cloud dashboards were screaming. Here's the ugly truth. The modern internet is a monopoly board. AWS owns Boardwalk and Park Place, and when it goes down, everyone's homeless. Expect Ripple chaos. Stalled shopping carts, glitched banking, smart homes reverting to dumb bricks. Businesses bleeding millions by the hour. If this lasts, markets will twitch and regulators will start asking the D word. Decentralization. For now, the cloud's on fire. The question isn't if it's fixed, but who still trusts the sky after this? That is what Sky News said about this outage, which really affected just everything today, it seemed like, especially markets, okay? Robinhood, Public, Webull, none of them were responding correctly, and the odds are good that even by the time this video is published at 4 p.m., all of the errors are not fixed. They're still not all fixed. It's like a ghetto 2021 disable the buy button all over again, okay? Because people just cannot go out and buy like normal, like they were going to. So yes, some areas, some stocks are doing well, others are not. Today is really a day in which you don't want to pay too much attention. Today really just doesn't matter because of how widespread the outages were. you can't really take this market too serious today. No matter what your favorite stock did, no matter what happened, the fact of the matter is there is a large chunk of investors that were unable to buy or sell today. Okay? Kind of like 2021 and the whole GameStop situation. This is what it reminds me of. Like, the moves today, they're almost not real. Okay? Good or bad, whether you like that or not. So I think we could see one of these phenomena where today we really didn't have a lot of activity in markets from a lot of, especially retail investors. I doubt institutions were too affected by this, but there was not a lot of activity from retail investors because a lot of retail did not have access to their portfolio. The trading community portfolio, in fact, take a look at this. Nothing. Not a thing is happening here. Last was reported, I was up 4.5% in pre-market. It was up 5-6%, almost 7% at one point, and then boom, it died. I wanted to do some buying in this portfolio. I literally could not. Okay? It was literally impossible. Nothing loaded all day. Same is largely true for Robinhood. There was periods where the Robinhood portfolio worked a little bit and then it didn't work. Weeble's not working for me at all, but the charts are. Okay? So again, it's kind of like the whole Robinhood disabling the buy button on GameStop back in 2021. I mean, if you only allow people to sell, that was a different situation, you're going to have a lot of selling pressure. But with a situation like this, where people just really can't buy or sell, I do think you're going to get some pent-up demand because of the news that we are getting today. The news today is very positive, hence why the S&P is up 1%. Some of the comments made by Trump on China specifically, and potentially the government reopening this week, sound pretty good. Donald Trump says, I've been invited to go to China, doing that early 2026. Donald Trump says he could threaten China on other things, including airplanes. Then Donald Trump says, I think China will make a deal with us. Trump says, I think China will come to the table because of tariffs. Now, Donald Trump says today we're way ahead of China in AI. Trump says we'll be catching China on building ships. Trump says we're way ahead of China militarily. Trump says he hasn't told Israel to go back in, says Hamas will be eradicated if they have to be, and Trump on China says, assume we will talk about Taiwan at the meeting. And Donald Trump says today that China may pay a 155% tariff if no deal is reached by November 1st. NASA's Duffy says we are in a race against China, so we need the best companies to operate at a speed that gets us to the moon first. Trump says, I think we'll end up with a strong trade deal with China after South Korea. And Trump on China says, I expect to work out a fair deal with Xi. That's the Chinese president. And Trump on China trade says, we'll see what we can do. Trump says that China has been respectful of us. Trump and Australian Prime Minister sign a critical minerals agreement. And Trump says we are working with other countries on rare earths. Johnson says he will bring the House back to session if Senate passes a bill to pay furloughed workers. Russia's Lavrov and U.S. Senator Rubio hold a phone call. The talks are described as constructive, focusing on implementing understandings reached during the Trump-Putin discussion. White House economic advisor Kevin Hassett says the government shutdown could end this week and expects a moderate Democrats to support a short-term deal following weekend protests. Iran's supreme leader says America is the true embodiment of terrorism. Hassett on the U.S. economy says right now the numbers are great. Hassett expects the Besant meetings on China will clear up misunderstanding. Hassett says if the government shutdown doesn't end, the White House will have to look at stronger measures. Goldman Sachs sees a 0.3% September CPI rise. Goldman expects both headline and core CPI to rise 0.3% month over month in September, keeping core inflation at 3.1% year over year. They say cooling car prices, lower airfares, and easing labor and housing pressures could offset tariff-driven gains in categories like communications and furnishings. Core inflation is seen ending 2025 at 3.1%. We will be getting the CPI report on Friday. Citigroup says AI is not in a bubble yet. Citi says AI stocks remain expensive, but not in bubble territory. Its valuation models show only a few red flags, mainly in U.S. asset-heavy names and international adopters. The bank recommends staying invested, but taking profits in overheated areas, favoring AI at a reasonable price strategies. Citi also stressed the asset-light versus asset-heavy distinction as the sector broadens. Strong earnings and rising capex keep the AI outlook solid for now. And Goldman Sachs has said that the market shows some bubble-like signs, but remains driven by strong fundamentals. Here on the day today, the CNN Fear and Greed Index still remains deep in fear territory, coming in at 31 today, following Friday's close, where this was actually an extreme fear, is just showing you like, hey, the markets look okay on the surface, but under the surface, there's been a lot of pain and carnage. If you truly adopt the mindset of buying when people are fearful, right now presents an opportunity to be a buyer. Market momentum is neutral, stock price strength is neutral, stock price breadth, extreme fear. Put in call options, fear. Market volatility is neutral, safe haven demand in extreme fear, junk bond demand in extreme fear as well. The latest AI investor sentiment survey shadows similar numbers. Bullish investors at 33.7%, neutral investors at 20.3%, and bearish investors at 46.1%. People are bearish. Okay, the percent of stocks trading above their 50-day moving average rebounded a little bit from the lows we had on Friday at 42.1%, currently at 46.2%, but still, that's like 54% of stocks that are and have been in an active downtrend. Like, this market internally is not nearly as strong as you'd think if you looked at the headline S&P that is pretty close to all-time highs. But again, I think you just need to look at today as one of those days that really just doesn't matter. Because of the AWS situation, a lot of people were just not able to participate today. A lot of brokerages just failed people because of AWS. And again, it's one of those, like, if you had any day to just not wake up and not look at your portfolio, just live your day like normal, today would have been those days, because there is zero implication from the move today in markets because of so many people being shut out of their brokerages. I have a brokerage right now that I literally have not been able to get into today. Over $100,000 in that portfolio. I couldn't buy or sell if I wanted to. And I wanted to do some buying. And I was unable to. I imagine that's probably happening for a lot of people today. Now, as far as earnings, today and after hours, you have Zions Bancorp. That one could be kind of important considering the whole regional bank fear that we had for some parts last week. But tomorrow you have Coca-Cola in pre-market, RTX, 3M, GM, and some others. And then in after hours, Netflix, Intuitive Surgical, Capital One, Texas Instruments, Mattel. Wednesday pre-market, GE Veranova, Vertiv, Boston Scientific, Hilton, AT&T, Thermo Fisher Scientific. Wednesday and after hours, Tesla, IBM, Kinder Morgan, QuantumScape, SAP, Alcoa, Lam Research. Thursday, American Airlines, Honeywell, Dow, Hasbro, Nokia, Southwest, T-Mobile, AutoNation. Thursday and after hours, Intel, Newmont, Alaska Airlines, Deckers Brands, Boyd, Ford. And then Friday, you have Boots Allen Hamilton, General Dynamics, P&G, a couple other names. But the big ones, Netflix, Tesla, Capital One, Intel, right? American Airlines, Hilton as far as travel and the consumer, Capital One, again, consumer, are they still doing okay? Are they still spending? IBM, Texas Instruments, Vertiv, more of that second tier of the AI trade. We do have some little pieces of economic data, some Fed speakers, throughout this week, but none of it really matters until we get the CPI report. Now, I am under the assumption, again, as I said over this weekend, that the Trump administration does not have to put out the CPI report. I believe they're putting out the CPI report because it's probably going to show a pretty good number, right? Why have they not put out any of the other economic data, but they want to put out the CPI numbers, right? Again, maybe that's a flawed way to think about it, again, but that makes sense to me. So that's kind of my logic at this point. So Friday could actually be a pretty big catalyst. So let me know your thoughts on all of this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Ladies and gentlemen, have a great rest of your day, and I will see you in the next one.